The one and only Jamal Mecklai is with us on the phone line, CEO, Mecklai Financial. Mr. Mecklai, thank you very much, sir. Good morning. And thanks for taking a call on short notice. So what's the driver for the rupee getting back to almost, not quite there, but 66.8 right now?
Well, frankly, it's hard to say what is the driver, but my concern is that, if it closes at or slightly below this level, there are many things that drive markets. One of the things is sort of just simply technical trading. And if it closes below this level, 6.80, it will sort of close what's called a head and shoulder pattern, which could pull the way for another, perhaps a significant drop, another 1 rupee or so. Now, what's driving it? Whether it is going to happen, I don't know, it remains to be seen. What's driving it, I'll tell you about 2-3 weeks ago, I got a call from a very smart treasury head who told me, we never talk, but he called to ask me what I was thinking. And he said, my feeling is that, if you look at markets, Indian markets, there's been bouncing, and he was really talking about the equity market. They're just bouncing around a little bit, not really moving, And markets tend to get tired of doing that, and then they move very sharply. Now, nobody in the mind believes the market's going to go up, so likely it's going to go down. This was his thinking. And if it goes down, it'll pull the rupee with it. Now, equity markets seem to be steady right now. But then again, 2 days ago, I had talked with the treasury head of one of the largest Indian companies. And he says, I'm convinced and I believe that the government is ready to really bring the rupee down for export purposes, supporting exports. Now, frankly, when the market is dead in the water, market meaning the goods market, I don't think a weaker rupee is going to help exports. And equally, I don't think the government has the strength or skill to do that. But I'm just saying it's obviously a lot of people are expecting it to go down, and generally when a lot of people expect it to go down, it goes down. So what is driving it? I don't know, and frankly, nobody knows, but I think it's a pretty tricky situation. I've been calling, some of my clients who have large imports saying, Baba, be careful, thoda nickel ro. Now, whether the real concern, the real question, I guess, is not just whether it goes down. It has gone down in the past and it has bounced back. The real question is if this goes down, will it bounce back? Or are we going to move to another level? And frightening.
Okay, fair enough. That's an interesting way to frame it. You're saying the real question is, it just breaks down to and settles at a newer level, or it actually comes back and we should keep talking about the earlier levels from where it fell in the first place. What about the dollar itself? Strengthening against most global currencies, developed emerging market currencies anyway.
I have a little contrary opinion there, I feel that because I feel that the euro is much, I can't see the euro getting weaker anymore. It's 1.06. I used to think that the euro was going to fall apart. I don't believe it will. I think that the Europeans in their head, they see one Europe. Now, despite all the problems with the immigration, and really that's the new problem in town, big problem. I don't see it falling apart, So if it's not going to fall apart, I can't see it falling much beyond this level. So if the euro is not going to weaken very much more, the dollar has strengthened against all the emerging market currencies. Everybody and his sister and brother-in-law have been expecting that the Fed will hike rates in December. So, obviously you would think that the impact of the Fed rate hike has been built in. So I think we might actually see the dollar do something a little bit, that's short term, do something unusual and, slip a little bit. Longer term, it's hard to say. It's hard to say, because I do think that this reliance on super zero interest rates is completely misplaced. But then on the other hand, the U.S. economy is showing signs of life. So, maybe I'm wrong on that, but I don't think the dollar can rise very sharply right now.
Actually,
6 months from now, I don't know.
More than a few people Mr. Mecklai spoke to are saying that post the 15th, mid-December basically, once the Fed hike is behind, emerging market equities should actually do very well, meaningfully well for some time before, of course, people realize that the situation is still very tough and they fall again. but the immediate reaction should be actually a rally across EMs. So, I mean, that kind of ties in what you're saying, the dollar weakening a little bit maybe.
Yeah, the dollar may weaken a little bit, and frankly, I don't know any markets, let alone equity markets. And I'm just saying that they could bounce, but see, if you really look at it, where is the growth, right? I mean, for equity markets to rise sustainably, you need growth, you need demand. There is no demand in the rich countries, and all these efforts of cutting rates and cutting rates and cutting rates are not going to really stimulate demand. I mean, monetary policy can only do so much. You've really got to make some structural changes in fiscal policy, and actually tax capital-based income, like capital gains and dividends, and not tax earned income. Poorer people need more money in their hands, and you can only get that by further cutting tax rates. You can only further cut tax rates when you've got a huge deficit by getting the revenue somewhere else. So you have to increase taxes on things like capital gains, which are, very, very, very they've had a break for a long, long time. But I don't see anything like that happening. So I think we're going to remain in a volatile limbo for a while. I don't see equity markets going up sustainably.
All right. Thanks very much, Jamal. Great speaking with you.